aloha and welcome to Own the Outcome podcast. My name is Tyler Devereaux, and today we have Mr. Joel Friedland. Man, I'm so excited. I told you this off camera, but Joel, I'm so excited to pick your mind today. And all y'all listening to this, you're going to find massive value. This is somebody who's been in the industrial space for 40 years. I know he doesn't look like it, but he's been in there for 40 years. An absolute wealth of knowledge. So, Joel, welcome to the podcast.
Tyler, thank you. And before we start, I want to tell you what a big fan I am of yours. I have watched at least a dozen of your podcasts and some of your speaking engagements. And I just have to give you so much credit at your stage in the game, which is you're much younger than I am. You succeeded in such a big way. And I love the way you give back. I love the way that you talk about personal development. So I'm just really delighted to finally meet you.
You too. Thank you so much. I appreciate that a ton. Thank you. The feeling is very mutual. And I was telling Strat off camera before we even got on here, of how much I love to learn from men, or how excited I am to learn from you. And it's because, brother, you've been in it for way longer than I have. I mean, way longer. You've seen so many amazing, and you've done billions of dollars of transactions of commercial real estate. I can't remember the exact number. I want to say 2-something billion. Do you know the exact number?
Yeah, about 2.5 billion. But I don't look at that number as being very important. The most important thing is the current deal, whether it's going to work or not work, and how to make sure that it does.
Yeah, that's exactly it. So let's talk a little bit just quickly about the journey, like how you got into the industrial space. And that, we're going to talk about raising capital and how you source deals, but how did you even get into the space, period? And maybe even let people know what industrial even is. Maybe they don't even know what that is.
Well, I didn't know what it was either. I was 22 years old. I graduated from the University of Michigan, and I knew I wanted to get into real estate. And my girlfriend at the time, who is now my wife, her dad knew a bunch of guys in real estate and gave me a list of names. And I cold called all of them. And I said, hey, I'm looking for a job in real estate. I wasn't quite sure what it meant, but I just sort of knew. And I ended up meeting a guy not on the list that a friend of mine said, hey, there's this man that owns industrial property. You should call him. So I cold called him at 10 o'clock in the morning on a Tuesday. I was 22, just out of college, and I had no experience. His name was Milt Podolsky, and he was about 60. And I didn't know anything about him other than his name. I called him. I said, Mr. Podolsky, I want to get into real estate, and I'm looking for a job. And I said, I really don't know what industrial is. He says, kid, come to my office today. I said, well, I'm not dressed. I don't have a suit and tie. He says, just come over today. So I went over to his office and we met in the conference room. Big guy, big, imposing, interesting looking guy. And his son and another fellow that worked for them were all in the conference room waiting for me. And I'm so intimidated, I'm shaking. And they started asking me questions. And they said, we would like to know what your position is on going out and meeting people you've never met before. I said, oh, well, that's easy. I had a lawn business all through high school and college, and I went door to door and I convinced people to let me cut their lawn. And I ended up getting 64 lawns in a weekend, which is, they said, you did? Yeah, 64 lawns. I didn't know how I was going to cut 64 lawns a week, but I figured if I got the lawns. So my folks went away on a trip, and we had a garage, and I went to the store where I bought lawnmowers on credit, along with bags and bags of Scott's fertilizer and these fertilizer spreaders. My folks come home from the vacation and they try to pull the car into the garage, and it's stuffed with landscaping supplies. And they walked in the door and they said, what did you do? And I said,
I love this so much right now.
I started a business while you were away. I was 14. I couldn't even drive. I had to have friends drive so we could move stuff around in their pickup trucks and in their cars. And I hired dozens of high school kids to help me do that business. So Mr. Podolsky says, you are so hired.
Yeah, exactly. Exactly.
So he said,
That's
look,
amazing.
it was 1981. Interest rates were 18%. He had 80 buildings and 10 of them were vacant. And he said, your job is going to be to go cold calling like you did with the lawns in industrial parks, talking to the owners of companies, seeing if they'll move from where they're at to leasing one of my vacant buildings. And I just went out and started driving around and stopping in, and I never stopped. I loved industrial because it's manufacturing and distribution buildings where people make stuff and distribute stuff, and every business is different and they're fascinating.
I bet that is what's cool about that. Is a cool thing about that is you have different businesses that I'm sure you learn naturally. You learn some things about. What's the most interesting tenant that you've had?
Well, the one that I like to talk about the most, you watch Shark Tank?
Yeah, yeah, yeah.
So in season one, there was this guy, Jonathan Miller, who had a company called Element Bars. And he got a deal with Kevin Harrington. It was before Mark Cuban even joined it. It was the other group. So the other Kevin and I think Damon and the women, Lori. So
Barbara.
he gets a deal, and they said, this is the best negotiator we've ever seen. And we own a building in the city of Chicago, which is where we live. We have 20 buildings in Chicago. And this guy gets in touch with me and he says, my name's Jonathan Miller and I have a company and I need 50,000 square feet to lease. I said, I saw you on Shark Tank. He said, yeah, I was on Shark Tank. So I leased him the building
Fun.
and he's been in the building for 5 years at this point, and he makes millions of protein bars a year in our building. That's my most
That's
interesting.
cool.
The
Yeah,
worst
that
one,
is cool.
the worst one is the U.S. Postal Service. They have a space where they've got 17,000 feet for a warehouse, and they've got 40 parking spaces, but they have 70 trucks. So they
Oh
clog
my
up the
gosh.
street, and nobody can get by, and all the neighbors are up in arms because the street is ruined, and they won't leave. They have a lease, and I can't get rid of them.
Oh my gosh. And that, yeah, filters and funnels back up to you for sure. That is a tough one. How do
Yeah,
you
yeah.
source these deals? I would love to get into some of the nitty gritty because is it set? Well, I know there's similarities between the multifamily space, I'm sure, and the industrial space. But how are you sourcing these deals? Are you cold calling right now to source deals as well, or is it broker relationships, or what is that?
Yeah, it's broker relationships. So there's a group of brokers called the Society of Industrial and Office Realtors. It's an international group. There's 4,000 members. And they're the most experienced brokers who do industrial and office in the world. They're all over they're in Hawaii, they're everywhere. And in the Chicago area, we've got about 80 members. And these are people who have been in the business a long time, and they all have relationships with owners of these industrial buildings and tenants. And we do a lot of work with them. We reach out to them. I talked to 3 of them today. Hey, do you have any deals you can sell that you know about that I don't know about? And so we work with the brokerage community. We're very into paying commissions because they like to earn money for bringing us a deal. But we also cold call, and we've got people making this past summer. I hired 10 summer interns, college students, and we gave them 500 buildings between the 10 of them to go meet all the owners and make offers. We made 500 offers with these young guys going in groups of 2 and 3 to meet owners of companies that also own buildings. Like they bring an offer and they'd say, hey, would you like to sell your building? And they mostly got thrown out. It was mostly like, get the hell out of here. I'm not looking to sell. But one of the young guys brought an offer and he handed it to the guy. He walked in the front door and the owner just happened to be by the door. And he said, hey, I'm looking to see if you might want to sell your building. I have an offer for you from my boss. The guy says, let me see that offer. And he takes this piece of paper, literally takes a piece of paper, and he says, this is what I think of your offer. And he drops it on the floor. And these guys come back to the office and they said, we had this really bad experience. I said, let's get on the phone and call the guy right now. They said, what? I said, let's recall him. Let's not take no for an answer. And we called them up. All 10 interns were in my conference room, and the guy's on a speaker. So I say to him, Bill, you weren't very nice today to a couple of my summer interns who brought you an offer. I'm just going to ask you, would you consider selling your building? He said, no, fuck off. And then he slams the phone down. And my guys are like in the conference room clapping and hooting and hollering because the 65-year-old guy just got a fuck you and a hang up.
That's so great.
Yeah.
Oh, you know what? I love so what I love about that is that I'm sure people listening because I did too. You're gonna come in, you're gonna save the day, you're gonna close the deal. But it's like, listen, man, no matter what level you're at, you still get those, you still have those conversations, you still have those days for sure.
Yeah. Yeah. You can't take them
Oh,
seriously.
that's awesome.
Yeah. Yeah.
How do you, so I love that creative approach, though. I absolutely love that creative approach. And what a great learning experience for them. My question for you, how do you determine, like, what's your buy box on, like, what is a good one? What is a bad one? Because I know that you're a very conservative investor.
Yeah.
So what does that buy box look like for you?
Okay. So we're long-term holders, first of all. So we look for buildings that have a certain long-term value. We're not looking to buy and sell and get out. We're not 2-year, 3-year holds. We don't look to make big IRRs real quick. We look for yield. We're trying to get an average, let's say, of an 8% cash on cash return for a no debt deal over, let's say, a period of 7 years. And so my buy box is buildings with good geometry. In industrial, and I'm sure it's true in multifamily, right? If it lays out right, it's better. The parking has to be in the right place. There has to be enough parking. The front door has to be in the right place. In industrial, it's about loading docks and drive-in doors because there's truck traffic that brings the products in and out. So every over-the-road trailer you see on the highway every single day, all they're doing is going between one industrial building and another. And they have to have enough room. So you have to have 136 feet of maneuvering room so that when the truck pulls into the parking lot and backs up, there's enough room that they can maneuver without having to do a jackknife. So geometry of where the parking is, I'll give you a crazy one. People bring me buildings all the time where the parking's in the back. Well, we live in Chicago. It gets cold, it snows, it gets icy. If the parking's all in the back and the office is in the front, visitors don't know where to park. So they go in the back, and now on a cold or rainy day, they have to walk all the way around. And either that or they have to walk through where they're at risk of getting hit by a forklift truck or getting their finger caught in a machine. So I don't like parking in the back. I will turn down a building no matter how good it is if there's not parking on the side or in the front near the front door. It gets that specific. So it's the truck maneuvering room, where the parking is. And the first 3 rules of industrial real estate are parking, parking, and parking. Because if there aren't enough places to put people's cars, the employees can't go to work. They have nowhere to park. They get squeezed out. So you have to have enough parking in addition to it being in the right place. Plus, in industrial, if you drive by the Amazon warehouses, those are all industrial buildings. The ceilings have to be high because companies stack products in racks. So if you've got a real low ceiling, you can't stack the stuff up. And even in a small building, we buy smaller buildings under 100,000 square feet. The Amazon buildings are more like 400 or 600,000 square feet. With these little buildings, we still need higher ceilings. The low ceilings bring the value down. So that's our buy box.
Yeah, those are not things that I would have. Those are great details. Those are details that I would have not thought of. With your ceilings, is there you said high enough? Is there a certain like height that is like a walk away? Like I'm done. This is a no go.
Yeah, we bought a building today. We bought a building in a town called Carroll Stream, and we have an international tenant that's based in Japan, and they make equipment for doing surveys for when people build roads or they put foundations into buildings. They have to be perfectly flat. And you know, when you're on the tollway driving around, there can't be water pooling around. So they have these laser based. They work with the satellite. It's crazy, but they make perfectly flat and or tapered areas of ground when you do the excavation and when you pave. So that's our tenant. It's an amazing tenant. The problem that we have with a building like the one we bought today is it's only 10,000 square feet and the ceiling height is 14 and a half clear. I wish it was 16. I wish it was 20. But when it's that small, they don't really stack up that much stuff. So this equipment that they use for surveying, it's in racks, but it doesn't have to go all the way up. So we compromise depending on size. But if I bought a 50,000 foot building and the ceiling wasn't 28 foot clear, I would be literally making a stupid deal.
Yeah, that's a great point too, depending on how big it is and the needs, because how big it is going to, you know, correlate over to the needs of the tenant, I'm sure.
Yeah, Amazon needs 36 to 40 feet clear.
Okay, there we go.
Yeah.
And
And
so
what's funny,
you
I'll
said
tell you
that
really,
you're,
yeah, go ahead.
no, go ahead, yeah.
I'll tell you a really funny story. The owners of the buildings don't know how high the ceilings are generally in these smaller buildings. It's not an important detail to them. It's important to me. So I have my little laser measurer. It's important to me. So I'm sitting in a meeting with a seller in about a 20,000 square foot building, must have been about 30 years ago. And this is where I learned it 30 years ago that no owner knows how high their ceiling is. So I'm sitting there with him and I said, I'm interested in your building. It's great. How high is your ceiling? He says, I think it's like 30 feet. We go back there and I look at it and I said, this is 14. How could he be so wrong? You know, it just seemed really high to him. He made up the number. So people don't know. You know, ordinary people
Yeah,
don't. Yeah.
that's funny. You know what? That correlates into multiple areas of size, you know. We overestimate a little bit. So have you ever, what would make you walk away from a deal? Have you ever had that experience where you're under contract on a deal, you know, going through due diligence? We can even talk about what your due diligence process looks like, but having
Yeah.
to walk away from deals or anything like that.
Yeah. First of all, last year we walked away from our favorite deal that we had 3 buildings in one package. And the owner told us the ceiling was 15 foot clear. They're little buildings and that was enough. So we believed him before we got serious. We then went to the building. We found out it was 12. You know, that same story. The owner doesn't know how tall it is. We don't buy 12. But the price was so good that I thought these are little buildings. Maybe at 12 feet, we'll still buy them. One of the 3 buildings had the truck docks on the side. So generally speaking, when you go into an industrial park, no one knows what industrial parks are because they're hidden. They're like retail, you know, Starbucks, you know, Targets, you know, office buildings, multifamily, but industrial's behind stuff. So I'm in this industrial park and I thought it was going to be an easy deal. Even after the 12-foot clear, I compromised and I probably shouldn't have. But the loading docks, which usually are facing front, so you can maneuver the truck on the street. And that way you don't have to own extra land for maneuvering. The city owns the land and it just slows down traffic while the trucker's backing in. The cars all have to stop while he's making the turn. This set of docks was on the side. And what I noticed was that if you pulled the truck up the parking lot between the 2 rows of parking up the aisle, and then you went to the very end at the back of the lot, there wasn't enough room to pull the truck forward. You need 136 feet and then back into the dock. There was only about 80, 90 feet roughly. So the neighbor actually had a parking lot adjacent to ours. They touched. It was like one lot here, one lot here. And I went to the neighbor and I said, can I make a deal with you to get an easement? Because I know your neighbor's using your parking lot to maneuver his trucks, because that gives him 136 feet. We only have 80. You guys have about 70. It's 150. And he said, yeah, for 50 grand, I would give you an easement to use that to maneuver your trucks. So we went under contract, and then we found out there was an environmental problem. Someone had spilled a solvent that created a carcinogen in the ground that spilled on the floor and was never cleaned up. That's bad. So we called our environmental consultant. He came over. He said, I can take care of this for about 60 grand. We'll fix it. We'll dig it out. We'll take the bad soil. We'll redo the floor. We had spent $40,000 on due diligence, and I had counted on the neighbor giving me the easement. So I go to him after we're ready to close. It was a $4 million deal. I had raised $4 million, 100,000 each on average from 40 people. You know how much work that is? I was ready. Our lawyer was ready to close. I just couldn't pin down the neighbor to get the easement agreement signed. So I go to him and I said, I'm ready. He says, I've changed my mind. I'm not doing it. I said, why not? He says, ruins the value of my property. I didn't think it through. I couldn't buy the properties. You can't buy a property where you can't get the truck in the dock. 40 investors, $4 million raised, environmental study, roof studies, and legal fees, all of it. And I had to walk away. Very disappointing.
How much time? What's the time frame on that?
It took us 3 months to do it. Probably my partner, Eric, and my time, I would say we each spent at least 60, 80 hours on that thing, probably 150 hours between. And we walked away after we thought we were going to buy it. And interestingly, after we walked away, one of our favorite competitors, we love the people who are in our business. It's a great group of people, even when we compete. One of our competitors bought the property. And I think he just didn't think through the truck dock thing. And he didn't think through the environmental thing. And he didn't think through the 12-foot ceiling problem. He just bought it and came to me, I don't know, maybe 3-4 weeks ago. And he said, he didn't know that we were under contract. We walked away. He never even knew we were there. And he comes to me, he says, listen, I bought some properties. I don't think I want to own them long-term. Do you want them? I said,
and it's that property.
I already turned them down once, same property.
Oh my gosh.
Yeah.
So is he struggling to get, is he struggling to get tenants in there and that's why he's wanting to offload?
No, they're leased by a manufacturing company owned by a friend of mine who has been in there since the buildings were built in the 1960s. Tenants going nowhere. There's 9 years left on a lease, but we're long-term holders. When it comes back in 9 years, if the tenant leaves, we don't like the physical building. The geometry is bad.
Yep.
Yeah.
You have to look at it, other than that. When you say long-term holders, because you're syndicating these deals, so you're bringing investors in.
Yeah.
But then are you holding them for, you said 7 years, I think, but are you holding it even longer than that?
Much longer than that. Our average is 7 years. Our average is 7 years. But we have buildings that we've owned for over 30 years, and we have buildings that we've owned for over 20 years. And our investors never want to sell them because they get great cash flow. And if we sell them, they have to pay taxes. And they can't get the same cash flow anywhere. And these are great buildings with good geometry. They're good long-term holds. And they've gone up in value a lot. A building that we bought for, let's say, $1 million 30 years ago, today is worth $3 million. So we don't have to sell it to prove that it's worth $3 million. We just know that it is. But now the rent has gone up and the returns are more like 12 or 13% based on our original cost basis. It just doesn't make sense to sell. And if somebody wants to sell out, what I do is I introduce them to one of our other 250 investors and I let them work out I call it a mix and match, where someone who wants to buy that person's capital recapitalizes them, and then they come out and they pay their tax, and the new person comes in and they get a new tax basis, which is called a 754 step up. You make a 754 election, and the new people have a start over on the depreciation for the tax benefits.
That's cool.
Yeah.
I did not know that either. Okay, so how long? I love that play too. Because wait, one more thing I want to talk about because you go no debt. Do you go no debt or low debt when you're buying these things?
We've done a few low debt deals, but mostly no debt. The one we bought today, it's $1.5 million total. We've raised money from, I've got the chart here. We've got about 30 investors. The lowest investment is 25,000 from anybody, and the largest in this one is 250,000. So the range is that level. And so when I sent this thing out, and I said, we're buying this building in Carroll Stream, the first question, because people have heard me before, is how's the geometry? Perfect. The dock faces the street. There's parking on the side by the front entrance. And on the other side of the building, there's a vacant lot that could be made into more parking. Parking, parking, parking. And the tenant's great. They're on the Tokyo Stock Exchange and on the NASDAQ locally here in the United States. And they have 14 locations. So everything lines up. The only problem is the ceiling's only 15. But again, because it's 10,000 feet, it's okay. So
Yeah.
people say, how's the geometry? I've learned from you. The
That's
geometry is
awesome.
great. That's why it filled up. Because when I say the geometry is great, and we also do a Zoom call with all the investors who are interested before we put it out. And we let everybody ask questions. And we have one person who's a civil engineer who just joined us. And he asked the best question. He said, is the land next door buildable, or do you have to do something with the stormwater? Because today stormwater detention is a big deal. So we had a value add new investor, which is great.
Yeah, yeah, that is awesome. So, okay, so this brings me to my next question because you've raised a lot of capital and you've managed a lot of investors. Like you just said on that one deal that you backed out of, that's 40 investors. But imagine you have hundreds of investors. Question one would be, how are you building those relationships and how are you raising your capital? I know that that is a broad question, but if you were to bring it down, how are you at first finding the investors and then how are you building trust with them to raise that capital?
Do you ever watch Curb Your Enthusiasm? You ever hear?
I haven't for a while. I need to watch that again. Yes, that's a very funny show.
Do you ever watch Jerry Seinfeld where he does comedians with coffee and cars?
Yeah, yeah, yeah.
That's what I do. My life is going around having lunch with people and just getting to know them and understanding their struggles. They understand my struggles. It's really just a relationship building process where I really like my people, and getting together with them is it's an honor. Like I'm grateful for the time with these great people. I've got one investor who's 97 years old. He and his family try to invest $1 million in every deal, but I don't have enough room. So they have to keep it down. And I have breakfast with him a lot of Saturdays. I go to his house and I stop at a local restaurant and I bring the omelets. And now his grandson joined us. I mean, this is what it is. It's building the relationships with people and caring about them and being enough of a giver that they care back.
Yeah.
I follow
I
your
love
I follow your philosophy. That's why I like
no, that's
that's why I like what you have to say. I think that typifies very few people, and you're one of them that it does.
thank you. I think that is investor relationships are so sacred. And so here's a question because I know you talked about the no debt. I want to circle back to that actually because one of the questions that I had was have you always bought them with no or low debt, and is that because of and what drove you to that? Because I know that we talk about investors. Yeah, go ahead. Yeah, yeah.
That's a great question. My first deal I ever did was all cash, no mortgage. It was a $560,000 deal, 14,000 square feet, and I brought in 20 something investors. Some of them were contractors who did work at the building, and I felt that all cash was the way to go. I did my next deal all cash, the next one all cash. And then I met a young guy who became my business partner eventually. We had our company, and he grew very quickly into being a very solid deal finder, negotiator. And I brought him in as a partner, and he said, Joel, we could do so much better if we borrowed money. And I said, yeah, but I don't want to. He said, well, why don't we try it? So we did our first deal with a bank, and it worked out really, really well. We did our second deal with a bank. It worked out really well. Well, somehow we got up to 50 buildings by 2008, and they all had debt. We no longer had anything that was just debt free. And when the market crashed in 2008, I was at 7 banks. We owed personal guarantees at banks of over 70 million between us. And it was the most disastrous period of my life. I felt that I was underwater drowning, went into a deep depression, um, barely made my way out of it. Most of my friends who had debt at that time went bankrupt at that time if they were in the real estate business. Because if you had a 70% loan and the value of the property went down and the lender said, we want you to pay down the loan, well, how do you do it? And so I had, like Milt Podolsky years and years ago, he had 10 bad buildings unleased. I had 10 vacant buildings out of 50. And I fell into despair. It was horrible. And it took me a long time to come out with meditation and medication, a lot of counseling, a lot of friends that I was leaning on. And I made a decision that the highest level of debt that I'm going to do in the future is 30%. Our portfolio of 20 buildings, our average loan to value is 18%. But I only want to do debt-free deals. And if someone wants to make like woohoo kind of IRRs by leveraging the crap out of stuff, they're going to have to go with someone else because I won't do it.
That's man. That is a journey right there. The title of the podcast is Own the Outcome. And, somebody listening to the beginning of this, it could seem so easy, like everything's just fallen perfectly along the journey, but it's not how it works. There's always challenges. And so first off, when I say own the outcome, maybe that's the first question I'll ask is, what does that mean to you? When I say own the outcome, how do you translate that for you?
I agree with something that you say a lot, which is don't blame people. When something goes wrong, they didn't force you to do something unless you were in a prison camp, right? I mean, that's the only time that you're forced to do anything. You make the decisions. Someone might suggest something or sell you on something. Own it. You make the decision, own it. That's why I love what you talk about. You don't blame people. You take accountability and responsibility, and that's what it means, and that's why you call it that as a podcast name. I think it's perfect.
That's exactly it. And
I could quote you. I've got your quotes. I know the books.
Thank
I mean, I'm almost like a stalker of yours.
Hey, honored. Listen,
Napoleon Hill.
Honored.
Oh, the Devil book. I mean, I all your stuff. I got your stuff.
You're such a stud. Thank you, man. It is though. It's such a beautiful way to live life. Like placing blame is exhausting. It's exhausting and so debilitating. So how did you, when you were in that period of all that debt due, investor money at risk, how did you start to get out of it? Because you said that you, like, what were the tactical things that you did to get out of that? How did you own it, I guess?
I became more involved in some faith things. I did a lot of Bible study stuff. I had a core group of investors and friends, and we would go to breakfast. We had a men's group. My wife was incredible. My in-laws came to dinner when I was really depressed and brought dinner almost every night. My mother at the time would come over and give me like a neck rub to make me feel better, like a massage and it was tough. I would go to the office and I was so depressed. I actually closed my door of my office. I was lying on the floor, just like moaning. It was so bad. I had my winter coat as my pillow on the floor, and I put the chair up against the door so nobody would come in. It required finding a really good therapist also, and just sharing with people. I'm a strong believer in the 12-step programs, and I found one that I liked because I had a friend who was a very big time business gambler, and I stumbled into Gamblers Anonymous, and I realized, people who put a lot of debt on deals and are making bad decisions without really thoughtful due diligence and without having a backup plan, real estate can become gambling, just like the stock market can become gambling. And I met a bunch of people from that group and discovered that gambling is an addiction, but it's also an illness. And there's this big part of it that's sort of big shotism. People who get into this, sometimes there's sort of a personality type where they're out to prove how fantastic they are and how rich they are, even if they're not. And so I decided not to be a big shot. I'm going to share I open with, people say, tell me about your past. And I say, well, I got into trouble in real estate in 2008 and went into a depression and hardly was able to come out of it. That's what I start with, because I'm so great doesn't really resonate with anybody.
Man, thank you for sharing that. Like, I'm literally, you saw me taking notes because here's what I took notes on. Here's what I wrote down. I put faith, because I believe that success leaves clues, and I believe that overcoming challenges leaves clues as well. And you put faith. What I put, sorry, was faith, community, family. Sounds like you got a beautiful family, man. What a blessing. Like, what a beautiful family. That is like such an amazing what you can overcome with family and love, And then
Yeah.
therapist, and then sharing with others, I thought was so powerful too, because I'll tell you that, I mean, there's a couple of these things that I need to be better at. And sharing with others is actually one of those, because it is, you learn so much, and it's not complaining about it to others, it's sharing with others and talking about what has happened and what you're doing, I'm sure, like the direction forward. But then just people come out of the woodworks to provide advice and guidance and experiences they had and what they did. It just is a pretty powerful situation.
Yeah. Yeah. As I said, it's a lot like the Jerry Seinfeld, driving around with people, and I take people on tours of buildings. I love doing that. I tell people, let's go to the post office building where they hate my guts. I'm the landlord, but let's go. And I drive people over there. We go in the back door, and it takes, I don't know, 3 minutes for them to throw me out. What are you doing in here? And they toss us out. So we go to lunch and we talk about, hey, they invested in this deal where the post office is this so difficult of a tenant. We just have a lot to talk about, but then it gets into personal stuff, and we talk about their family and my family, and everyone's got illnesses in the family right now. Unfortunately, we're going through, my wife was diagnosed with cancer, and she's having treatments, and people are delivering dinners to our house every other night, and people are driving her for her treatments the hour that it takes to get to the hospital. The community has just really put their arms around us, and our kids live local. We've got 3 grandkids, and our daughters bring the grandkids over, and it's such a joy to be with them. My grandkids are younger than your kids, but it's a fun age, 6,
Oh,
1, 2. It's really fun. So yeah,
those are so fun.
all of that. It's all of that.
Those are so fun. And that is, you know, the leverage side and being over leveraged and the game that you're in and the challenges that it poses and then the beauty that's on the other side of it. Doesn't mean there's not challenges, but just the beauty that comes from the other side of that and getting through the challenge, which then translates into everything we do, like the challenge that you're overcoming right now with your wife. I mean, man.
I have to tell you one thing. There are challenges every day. One of the greatest challenges is one of our buildings, the wall separated from the floor, and the rats and the mice are coming in. I don't know if you can see this. You see that rat
Oh my goodness. Yep. I can see that.
with its head caught in the trap? So I get a call from my tenant yesterday, and he says, I went to Vegas for New Year's and I parked my BMW in the loading dock. And while I was away, the mice or the rats crawled in and they ate the wires and the rubber that coats the wires to the battery and to all of the equipment. He says, $4,000 to get my car rewired. It's 2 years old. BMW, 2 years old, $4,000. So I said, look, that's not right. We own the building. I'll split that with you, 2,000 each. And I don't know, maybe that was really stupid, but that's how you build a relationship, and he'll never forget that. He'll never forget the rats.
Yeah. Yeah. That's it.
Yeah.
You know, a learning lesson that I pulled from what you were saying was and it's something that has just been evident to me as of late, that you share the challenges with your investors, because see, there's been times where I've thought to myself, it's my job to keep those challenges so they don't even know about them. So like we're grinding, we're getting after it, but it's like literally it was a pure intent of like, I don't want to burden them with a challenge. But then here's what happened. Then some of those challenges start to get into their returns. And when that happened, and they didn't realize we've been navigating challenges for all these other investments that we've had in the past and those kind of things. Like we've exited and they've reinvested. And so now when they had challenges that now ate into their returns, there was panic. And there was panic. And I created that panic because I hadn't told them there's always been challenges on every one of these deals. I just haven't shared it. So that's a huge takeaway for me when you say that, is it is so powerful, so important to share them the whole way through. And you share them in such an intimate setting too, which is so powerful.
Yeah, I do a letter every quarter to all my investors for each deal. And it's a lot of work.
Was going to be one of my questions, is how you maintain the relationship through the hold.
Yeah, it's a lot of work. It's a ton of work to do that. But the lunches and the dinners and the coffees and just phone calls with people. I like to talk to at least 3 or 4 investors every day. I keep them up to date. I was telling 2 guys about the reason I have the picture of the rat is because the tenant took the picture of the rat, and I've already talked to 3 investors about it. And at first they laugh and then they say, "What's it going to cost to fix this?" So there will be a cost to fix it. So, and it's thousands and thousands of dollars because it's a very big building, and it can't be the only place where the little rodents come in. It's a 106,000-foot building. My partner Eric tells me that the fix on this to put the material where the floor meets the bricks is somewhere in the neighborhood of $40,000. Well, I have to tell the investors about that, but it does go along with the rat story and the picture, so it's a little entertaining and a little upsetting. Guy calls me today. He's in not Cabo. He's in Cancun, and he says, "How's our deal going?" And I said, "Oh, let me show you the picture of the rat." And he says, "Oh," and he looks at it. I said, "You won't be able to afford dessert tonight because we're spending 40 grand to fix it. And your share of it's whatever dessert costs you tonight at dinner. So tell your wife and kids no dessert because Joel's spending my money on getting the rats dislocated from our building on Roosevelt Road." So, it's part of the relationship building.
Yes, that is. That is. What advice would you give somebody newer in the space who's about to start raising capital? What's some tactical 3 to 5 bits? I don't know, something tactical advice that you'd give them, knowing what you know now, both on how to source it, but also just bits of advice, I guess, in the raising capital side of things.
Yeah, the number one thing in raising capital for me is bringing the PPM to the meeting and saying, I'm going to start with the risks. I'm going to go to the risk section. I'm not going to go to the what you get. I'm going to go to what could go wrong. And they say, well, I don't want to hear that. I want to hear what's good about the deal. I said, okay, then I'm going to give you 3 things that can go wrong. I want to give you my 3 biggest worries before you talk about whether you're going to go in or not. And I'm going to make it fast. I'm going to tell you the 3 worries in 1 minute. But I'm not going to start with how great the deal is. If I didn't think it was great, I wouldn't be bringing it to you in the first place. But let's talk real. Let's talk real. the roof's bad. It's going to need to be replaced. It's going to cost tens of thousands of dollars at some point. And what I'm doing to be good with that is I'm going to add a lot of reserves to what we're raising. So we've got money in the bank. And instead of sitting in the bank today, you can get about a 4.5% return on treasury bills. I'm going to put it in T-bills. We'll earn some money on it. And the roof's bad. So you got to know that. And I've made a provision for it. Second thing, the tenant has only 2.5 years left on their lease, and I don't know if they're going to stay. And if it's vacant, we can have some vacancy for a period of months. In an industrial, usually it's a single tenant building, and if they leave, it's 100% vacant. So you may have an interruption in your cash flow if that happens. I just want you to know. Now, the good news is I think we'll get more rent from the new tenant. So you tell them both sides, but you don't tell them only the good side. And so that's number one. Be upfront with what could go wrong. For sure. That's the number one thing.
Phenomenal advice.
Yeah. The number two thing is saying to them, I want to make sure that this deal's right for you and that you're going in with the right amount of money. Because I believe that diversification is really important. And I'm not looking for you to put a gigantic chunk of your net worth in this. My opinion is that any one deal, if you put more than 3% of your net worth in it, you're making a tragic mistake in terms of the common sense of diversification in the business world. So if your personal net worth is $5 million, you better not be putting more than 150 grand in. And I'd say 100,000 is probably right, which is more, it's 2%. And because if something does go wrong, you want it spread around. I got a call from a guy today and he said, I want to put 100 grand in the Carol Stream deal. I just put in 50. I want to put in another 50. Unfortunately, we're oversubscribed. So I said, I know you so well. I know you love this deal. Put the 50 in another deal and diversify. Let me give you another one to think about. So that kind of thing.
Those are great. That is like honestly gold when it comes for capital raising. And you saw, once again, you saw me taking notes, and I'll re-listen to this whole episode and take even more notes. But I take notes on that kind of stuff because I love how my takeaway from this, when you went through, you start with the risk, and I'll tell you that is one thing that I talk about where I'll say you start with the risk. Number one, because they don't expect you to. But number two, like they need to know that there are. But what I loved how you did is you're like, hey, this is the roof problem. This is how I'm mitigating it. Hey, this is the tenant problem that you need to be aware of. This is how we're mitigating it. Right? It's like you're putting in the solution behind it, but you're making them aware of the risk so that they know. I think it's just powerful. And then you talk about truly wanting to do what's best for them, because what's so slippery in the raising capital space is you want to raise as much as you can, as quickly as you can, so you can get the deal done. Once again, like you said, it is a lot of work to raise money from 40 investors. But you also want to do what is best for them, truly best for them. And that's a long-term perspective, because if you don't, long-term, it's gonna come back to bite you. Long-term, it's not going to be a fit for both of you. It's just going to cause more turmoil and stress on all fronts. Yeah. And so setting that stage, it's truly doing what's best for them. I love that you said 3% of the net worth. No more than 3% of the net worth.
Yeah, I believe that very strongly.
Yeah, very good. Man, Joel, I could talk to you for way too long. We're going to have to do another one, man, where I pick your mind even more, but you just provided such tactical, beautiful advice today that I'm very grateful for, and I know is so valuable to listeners.
As I said, I'm probably your biggest fan, so I'm the one who's the lucky one. I get to talk to you for an hour. This is great. Thank you.
No, thank you so much. Do you have any last bits of advice or anything that you would like to tell the newer or seasoned investor that's listening to this?
Yeah, listen to more of Tyler's podcasts. They're great. That's my advice.
Thank you.
Yeah.
Man, I appreciate you so much. You're such a kind individual, and we're praying for your wife and your family as well as you guys go through that. How can people get a hold of you?
We are Brit Properties, BRIT Properties, and we have a website that talks about our philosophy and how to get in touch with us. through a contact form, and it's informational. So that's the best way.
One thing that I've heard you say before too is that you ask your investors more questions than you ask them, or than they ask you, so that
Yeah.
you're like truly interviewing them to make sure that it's a good fit. And I love that. And so we'll
Yeah.
put we'll put that contact information, those things within the show notes. And my goodness, I can't believe I didn't even mention your company name in the very beginning. I just dove right in. So we'll make
Okay.
sure that we splice something in on that as well.
That's all right. All right. Great.
Awesome. Joel, thank
Thanks.
you so much for your time and just for being willing to give back, to share the knowledge, the expertise to help those of us who are coming behind you. And just so grateful, man, for your time today. Thank you, thank you, thank you.
Too. Thanks, Tyler.
Hey, and everybody else out there, go share this episode. Go connect with Joel and Brit Properties and see what investments they have, and live always with aloha. Peace.